All right, back to work. Boy, fantastic day today. Beautiful bear trap off the low of that range. If you watched last night's video, hope you guys made some bank this morning. Now, more good news coming tomorrow. We have one of my favorite chart patterns setting up on the S&P and the NASDAQ right now. I call them slingshot breakouts. These usually give us up to 3 specific trades the following day. We'll cover entries, we'll cover exits, we'll cover some variations, of course, in this video. By the time we're done tonight, everyone will have a roadmap to make some money on Wednesday morning as well. So enough of the intro. Charts are all prepped up. Let's go make some more money, more moolah on Wednesday's trading session. Boy, NASDAQ, triple Qs are all ready. The E-mini and the SPY is ready. Glad to have you here ready with me this evening as well. I have 3 very important clues, simple but important clues here on the charts in front of us that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly time frames. It is very easy to see right now. We are bullish overall on the S&P and SPY, bullish overall on the NASDAQ and the triple Qs. Remember, I like to use these higher time frame charts almost like an overall directional bias, an overall directional filter. So one important clue for tomorrow's winning trades is this overall bullish bias. But as you know, right, these hourly charts, they're not going to help me time the best entries for tomorrow. I have 2 even more important clues here on some faster time frames, some tick charts that will help us bring this all together and time some winning trades tomorrow morning. Before we talk about those entries, though, and those 2 more clues, let's check schedule for tomorrow, because tomorrow is a busy Wednesday trading session. And we got one big news event tomorrow, that new home sales number that comes out at 10 o'clock Eastern time. Remember, anytime we see news at 10 o'clock Eastern time, you want to pay attention. Also be aware too, tomorrow, really Thursday and Friday this week, we start turning the corner into the end of the month and the end of the quarter. So the next couple of days, Wednesday, Thursday, Friday, especially next Monday, we do expect there to be an uptick in volatility, which means lots of profit potential for all of us day traders. So big new home sales number coming out tomorrow morning, 10 o'clock Eastern time. Keep that on your radar, and we're hoping for an uptick in volatility tomorrow more than the rest of the week here in our trade room. Now back to our charts though, because it's good to know when the news is. But we don't trade news, we trade the patterns we see on the chart in front of us. I mentioned earlier, we are bullish overall. That is one of the 3 clues we have that are tipping us off to winning trades tomorrow. I have 2 more important clues though on some tick charts here. Let's grab some tick charts. This is a 7,000 tick chart. I like to use tick charts because tick charts are based on volume and they make pattern recognition a hell of a lot easier. All the time frames, upper left-hand corner for you. And in case you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. I see 2 really important clues here on these tick charts. One important clue, as you can see here, is this bull move up into this trading range. Now, this is where the idea of a slingshot breakout comes in handy right now. Ranges. What do we know about ranges? They love to rotate down, up, down, up, down, and up. Now, we are an overall bull market right now, and oftentimes this rotation, it rotates and slingshots, kind of shoots and runs higher. There are 3 types of trades I look for during a slingshot reversal, slingshot breakout like this. I'm going to cover that in just a moment. The second clue is this trading range from, mid-morning, early afternoon. Now, why is that range important? You'll notice back and forth, that trading range, because anytime we see a range breakout, we know the market loves to break out pullback. So if for some reason we don't get that slingshot or we get stuffed off the all-time highs up there, I got a game plan, I got a backup plan for us for that breakout pullback. I have 4 different ways to time the proper entry on a breakout pullback. Let's talk about that a bit later on in the video, towards the end of the video. Let's talk first, though, about that slingshot breakout. Because, again, these are relatively rare, and boy, are they powerful. So bull move up into a range, we're rotating off of the low, and the goal is to slingshot and bam, right, break out through those all-time highs. Now, when I think about a slingshot breakout, the first of 3 trades I look for is going to be a bear trap. Strong pop up, shallow pullback, higher high in price. Remember, separation equals strength. Strong pop up, shallow pullback. If we don't see this thing pulling back very far, start separating, higher high in price, this is where a bear trap comes into play here. Now, bear traps are very simple. I want to get the higher high right below that low and a strong green candle closing above that 21 EMA. Now, pay attention. Very important. The size of this breakout leg can be projected now as a measuring leg going higher. That will tell you where to take that profit target and stop buying. Trade number 1 of 3 is a bear trap pattern. Strong pop up, shallow pullback, bear trap below that low. The next one now we're going to start looking for a breakout pullback off of that previous trading range. Now, when I think breakout pullbacks, I think about a 2-legged pullback. It goes below the moving average, 1 leg, and 2 leg. Now think about a measured move that goes a bit too far, right? Measured move, AB equals CD. Now, I don't have a crystal ball for tomorrow. I don't know how big that first leg will be just yet, but that's the formula to find a breakout pullback. Ideally, to be somewhere off what was resistance becomes support off that trading range. Now, you know me, right? I'm not going to pick a bottom on this because it may dump all the way back down again. And I will talk about how to short that thing if it does dump in a moment here. But I'd like to, though, wait for that pullback and use what I call a failure pattern, right? Because it may keep on going. I don't know how far it'll pull back. What I do know, though, is all of that momentum is going to want to retest that high here. So I'm going to wait for the price to pull back to the 21 EMA. I'm going to use what I call a failure pattern. In my free video course, I call these 2-try failures. Let the bears try once, let them try twice. And the reason why is because now we have their stops, right? Now we know where stops are. And think about this. If you're a seller and you get caught short, you have to buy your way out of that position, right? So when stops get hit, this becomes a short squeeze, a strong run going higher. Sellers become buyers in that scenario. Again, we call these failure patterns in the free video course. And then one more pattern here. As it goes higher, I want that same bear trap pattern, that same higher high in price, that shallow pullback, and that trap right below that low. So the second trade I'm watching for tomorrow is a 2-legged pullback. It's basically a breakout pullback off that trading range. More specifically, it's a failure pattern into a bear trap pattern. We're trying to go back up and take out that high. That's my second trade I look for after a slingshot breakout. The third and final trade for a slingshot breakout is we call a pop and grind breakout. Now, oftentimes we'll run up and keep on grinding and going higher here. If we begin to grind and go higher, these are easy. Mark a trend line off those highs, bring it all the way down at that low down there, pin it down at that low. That makes your channel. Now, very important, look left. Find one of these prior swings, line it up around that channel low, wait for that pullback. I love trap patterns. This could be a bear trap. Look at me showing you here. Get below the moving average. This is where failure patterns live. 2-try, failure pattern into a pullback combination. Really any of the entry patterns you guys are learning inside the free video course. So the third pattern we look for on a slingshot breakout like this is we look for that pop and grind. Draw a trend line off those highs. We pin it all the way down at that low. And remember, you want that first test. The first test is always the best test. It could be a bear trap. It could be a failure. It could be a pullback combination. That's the entries I'm looking for off the low of that channel. Now, let's slow down for a second because we've covered a lot in the first 10 minutes of this video. I know that most of you guys watching right now, you know these patterns already. You're making money with traps and failures, love slingshot breakouts like this. But if you're watching for the first time right now, this might be a brand new language for you, a brand new strategy to learn. Don't you worry though. I teach the entire roadmap. I have hundreds of examples of failures, traps, Everything's taught in so much more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and start making more money. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link that popped up. Take that free video course, learn the roadmap. It is perfect for anyone who is serious about making money in these markets. And also be aware too, I'm going to put all the important links tonight, the description of this YouTube video. I'll start first with the free video course links down there. Learn the roadmap, start there first. Don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. I'll put trade room information links for you there, description. And last but not least here, I post a lot of charts and videos and mindset stuff on Twitter or X. If you're on Twitter X, give me a follow. Again, all the important details you'll need, all the supporting information to learn more and make more is all linked up in the description of that YouTube video. But those are three patterns, 3 entries I'm watching for tomorrow, right? It's that bear trap going higher, that 2-legged pullback for the breakout pullback. And again, if this thing just launches and starts grinding going higher, we know how to trade those pop and grind. Remember, first test, right? First test is the best test. Now, I want to talk about that breakout pullback, because in all reality, that would be just as lucrative of a trade. In fact, you could argue that breakout pullback is even more desirable than the slingshot breakout, because we're buying nice and low. Before we talk about the breakout pullback, though, we'll talk about that here in a moment. Let's talk about if I'm wrong, right? What if I'm wrong? We have the all-time highs right there, right? This is no joke, right? All-time highs overhead. So what if we run up and start failing off that high? How could I sell off the high? I outlined a couple different trades, 3 trades to buy if we get a real blast going higher. But again, all-time highs, I have 2 ways, 2 reversal patterns I can sell off the high. Now, be aware, warning, reversal patterns are not as reliable as with trend or continuation patterns. So in my personal trading, I always go half size position, quarter size position. If you're a new trader and not making money going with the trend yet, this might be a 0 size position. So just be aware of that. Reversals are never going to be as consistently profitable as going with the overall trend. With that said though, here's one reversal pattern off the high. If I want to sell off the high, I need to trap in buyers. This is not a good place to be a buyer. It will be a good place to be a buyer if we can start getting some proof, right, of shallow pullbacks, breaking through these highs up here, right? It will become a good spot to be a buyer if we can get some proof here. But if we run higher here, I don't want to buy into this area. I'll look for buyers, rookie buyers, to try once, try twice. Now watch this one closely. Very, very important. It's a lower low in price. Why lower low? Because buyers want to buy low. We have to rope in these rookie buyers here right now. And remember, we have all of that bullish momentum going against us. So we have to really be careful and wait for the proper entry signal to run some stops. A strong red candle below that moving average, starting just above that high right there, that is a crown reversal pattern going lower. It's basically 2 tries for the buyers. Why 2 tries? Because we're so bullish right now. I need those stops to get run. I need buyers to become sellers when they get stopped out to basically turn this momentum over and run this thing back down again. Now, one great thing about ranges is the amount above the range can now project now back below the range, and that will give you an area for a profit target on that short. It will also tell us more specifically where to start looking for bear traps going back up into that range again. And again, in a moment here, I will talk about how to time the entry on that breakout pullback. Because again, I'm not going to buy blindly into that low here. So one entry pattern, again, is called a crown reversal. It's basically a bull trap off the high and reversal back down again. These are, I think, the most difficult reversal to take. A much easier one to take is a V-top reversal. So for example, we may get a strong run up, but there may be so many bears up here around this all-time high, this thing may get shot right back down again and begin to grind going lower. Now, we talked earlier about the pop and grind going higher. These are the same thing, same idea here. Market trend line, off the lows, bring it now, up around that high, and then look left. Find one of these prior swings that lines up well around the top of that channel, and repeat after me. First test is the best test. Now, I can't teach all the entry patterns in these YouTube videos because they'll be a couple hours long, but I do teach all the entries in that free video course I mentioned. So again, make sure you grab the links, description of the video. But again, this could be a bull trap, it could be a buyer failure pattern, it could be a pullback combination, maybe a strength trade. Again, this will all make more sense once you guys are digging through that free video course. And again, don't forget, right, the size of the breakout higher can be applied down below, and that gives you now that target going lower, right? Target off, take profit off, and then we'll talk about trapping the bears in and running back higher here in a moment, right, guys? So slingshot breakout, 3 ways to buy that slingshot breakout. And if they fail off the high, which I wouldn't be totally surprised because we're at all-time high here, I'll give you guys 2 different types of reversals. Again, go easy on the reversals, bit smaller size because they're not going to be as reliable as the width trend or continuation patterns we mentioned before. Now let's talk about the breakout pullback, because it's very, very realistic that may be the best trade for tomorrow. Whenever I see a range breakout like this, it's not an if, it's a when, right? So we definitely have that on our radar. Let's go to the NASDAQ now. I know NASDAQ, NQ's getting a bit lonely over here right now. I get it now. Before we talk about NASDAQ, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing the link with other trading buddies that want to learn this stuff too. That small action makes a huge impact on this YouTube channel because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you spending a few minutes with me every evening on these videos. So thank you so much for the likes, the shares, subscribes. Thanks for your support. Now, let's talk about the NASDAQ here. NASDAQ overall, you can easily see we're definitely overall bullish. No doubt about that. You probably don't need me to tell you that. How about some tick charts right now? The tick chart, once again here, is a 4,000 tick chart there on the NQ. NQ is not as voluminous as the S&P. And you'll notice right away here, we don't have that range down here, but we do have that pop up and that range right there. So NASDAQ's a little bit different than the S&P, but it is very much the same game plan. I mentioned earlier on the S&P, this bull move up right into a range and a rotation off of that low. If we do get that slingshot running higher, those same 3 trades I mentioned earlier on the S&P can easily be applied here to the NASDAQ as well. The bear trap, the 2-legged pullback, and that pop and grind channel going higher. At the same time too, we're now almost back to those all-time highs on the NASDAQ. If we get stuffed off those highs here, those 2 reversals, that crown reversal pattern and that V-top reversal pattern, those are still on my radar for tomorrow as well. So all the same stuff we talked a moment ago there on the S&P. Now talk about now if we don't get that slingshot, or if we do get that run up but then rocketing back down again. This is a great place right now for a breakout pullback on that S&P chart or on the NASDAQ coming in off the low of that channel. Now, just a heads up on this, if we do wind up going higher here, I will look to adjust this channel a bit higher. So this channel may not be like this tomorrow morning, right? If we go higher here, I will look to adjust that channel and pin it down at that low. So just be aware of that. However, if we go lower here, The most important thing about buying nice and low is we don't try picking bottoms. I don't know how far it will go. It may go here. It may go all the way to that 953 area, which in all reality will be a beautiful spot to be a buyer down here. So somewhere in this area, of course, tomorrow morning we'll know more in the trade room at 8 o'clock Eastern time. So on the pullback here, I can't pick the bottom on this. What I do know though is this is a horrible spot to be selling. I would never want to sell this, not in the overall bullish market, not with that range above me. So knowing this is not the right place to be selling, this is our opportunity to trap in some rookies who haven't learned these lessons yet. You know, we all have to pay our tuition to the markets. There are new rookie traders coming to the markets every single day, and they have to learn somehow, right? They might as well learn from us. Once those bears try once they try twice, now we know where their pain is. Now we know where their stops are. Now we know where those sellers become buyers, and we can squeeze those stops going higher. Again, in the free video course, it's called a failure pattern. This is a 2-try failure. Remember, once this thing pops off that low, squeeze those stops. This is where we always look for that shallow pullback, that higher high in price. This sets up that bear trap combination. We talk a lot about these in our trade room, that failure into pullback, that failure into trap combination. That is a really easy, I think, kind of bread and butter setup on a nice deep pullback. Now, let's talk about some variations of this, because this is kind of the gold standard, if you will, right? But we all know the markets get pretty messy sometimes. For example, I love the idea of getting a 2-try failure that allows me to risk small and earn nice and large. But what happens sometimes is we bounce up really hard and we go 1 try, 2 try like this. This is the same pattern. The bears are definitely in twice, but now think about your risk reward ratio. Risk is here, reward is right here. The sooner you understand how to filter these based on risk reward, the sooner you'll be avoiding losses and banking some nice winners. So what do you do in this situation? Well, what's the problem? The problem is I'm buying too high. How do we avoid that problem? Well, if you're in my free video course right now, you know the way you avoid buying high is with trap patterns, right? Traps. Traps are simple. Get below a prior swing. Now, when I get that nice strong green candle now my risk is here. See what I'm doing here? Reward is right there. That is a much better entry than buying way up here where your risk is there and reward is right there. Okay, so if it bounces hard off that low, don't chase after it. Think about the risk reward ratio on this. And a lot of times the better entry is that bear trap entry, but it's basically below a prior swing. Higher high in price, below that prior swing. Now, sometimes these can be, well, they can bounce hard, right? Sometimes they'll bounce hard with a V bottom and begin to grind going higher. These can be difficult because if you're anything like me, when it begins to grind up like that, I get frustrated. I get impatient, right? I'm tempted to chase after it. The one thing you don't want to do in these V bottom kind of grinders like this is chase after it, because the reason why it grinds higher is because sellers are walking away from it. They're not trying to shoot this thing back down to retest the low. This grinding motion is caused by bears bailing on their positions, right? So what we do is eventually the buyers will want to come back in, and the buyers are going to buy nice and low. So our patience will pay off on this. Find that new channel, draw off the highs first, and then again, look left, find some prior swings. I want to get underneath a prior swing. Why? Because that's where bear traps live. Get below the 21 EMA. Why? Because that's where failure patterns live. Pop right back above, pull back. There's where pullback combinations live, right? So we got again, bear trap, below prior swings, failures, below the moving average, and again, pullback combinations. And where's the market want to go? It'll always want to go back up and take out those big highs. So take that 1-to-1 first target, get rid of that risk, and leave that runner, like I know a lot of you guys did this afternoon, letting that thing run all the way back up to retest those highs. Now, one last variation of this. A lot of times we'll get that run down, we'll get our 1-2 2 tries, we'll get that nice, easy winning trade going higher. We'll get that 1-to-1 first target. You'll learn more about using stops and targets in the free video course. But you know what? Sometimes that move down is so strong, the bears will come in, hold a prior area of support, becomes resistance, and they'll make another run going lower. Now, these are not full-blown reversals, all right? These are not reversals, not with that big bull market we saw on the 60-minute time frame earlier on in this video. The way I look at this is anybody who sells that pullback, they're probably taking their profit where? At these lows. So sellers up here become buyers down here, right? That's one big important part. Now, big question, is this a good place to be selling? Please say no. Please say no. The answer is no, by the way. We don't want to sell low. You want to sell high, right? Don't chase the market running lower. But you know what? When I was a rookie, when I was brand new, I was trading based on emotions and instinct. I chase these things all the time. That's how I learned these double bottom retests. And, again, it can be double bottom. It can be a little bit lower than this. Again, I'm not going to pick a bottom on this. What I will do is once it pulls back, and I see bears committing once, bears committing twice, I'm not going to use some divergent signal or try reading tape or a moving average cross. Just trap the darn bears in, light those stops up like a Christmas tree, and squeeze them going higher, right? Stop relying on indicators. Indicators give too many false signals. When you need indicators the most, that's when they work the least, right? The momentum indicators like stochastics, MACD, and RSI, right? So skip the indicators, know where to look for bear traps, great spot for a bear trap. And then speaking of bear traps, don't forget, these things love to pop up, shallow pullback, higher high in price, and then that bear trap combination off of that low. Right now, I'll tell you, you better leave a runner on a double bottom retest. We see runs down, a retest, and a big run back up all the time in these markets. So on the S&P today, on the NASDAQ today. So again, if it rolls over, retest that low, this is not a reversal. It has to go a lot further than retesting that low for this market to be so bullish and turn bearish. Trap them in with that failure pattern and then add to the position. Remember, if you want to make more money, add to your winners, and that trap pattern is an easy way to do it. But again, leave that runner back to retest the high because those double bottom retests, they love to run. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, 8 o'clock Eastern time, come trade this stuff with us. I can't think of any easier way to start making consistent money in these markets than to learn, ask questions, and trade along every morning in our trade room. I'm going to put all the important links tonight in the description of the YouTube video. Start first on the free video classes. Everyone loves the free video course. So start there first, learn the roadmap, start making better decisions, start making money on your own. And as always, I'll put the trade room links down there, a Twitter and X links down there as well for you to learn more and follow more and earn more. Right, guys? Hope you learned a bunch on this video. Hope you use this knowledge to earn a bunch tomorrow as well. And hopefully I'll see you sometime soon trading with us in the morning trade room at 8 o'clock Eastern time. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.